Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Nice to have you with us today, and thanks for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the #1 business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch your podcast on TomWilsonProperties.com or on iTunes or on YouTube. And you can also go on TomWilsonProperties.com to sign up for our weekly newsletter that gives you information about what's going on in the world of real estate as economics applies to it and drives it. Also, by so doing, you can also sign up to get notice of our syndications that we make available to investors, typically for $50,000 a share, and that you can only get access to if you sign up by going to TomWilsonProperties.com. We also welcome your comments and your suggestions for future topics and future guests, and we're always available to answer any of your real estate questions. We have with us today another syndicator, Alan Lewis, who is a Chief Investment Officer and co-founder of Diversyfund. He's worked in the real estate industry for 15 years. He's been in the private equity division of a real estate company where he oversaw multifam and master plan residential development. He's been on Wall Street in the past, investment banker and a corporate attorney. And he's a graduate of Columbia Law School and BYU. Alan, nice to have you with us.
Hey, Tom. Yeah, I really appreciate you having me on.
So, Alan, when most people who get into real estate investing, I find it's a second or third career. Looks like you too started off kind of in the finance arena. What got you over into the real estate area?
Yeah, it's interesting. I started off, like a lot of folks in law school. Law school was just kind of the default. I knew right away I probably should have gone to business school, but they tell you need a few years of business experience before applying to B school. So went to law school, really enjoyed the law school experience, but realized right away I wasn't cut out to be a lawyer. But thought I'd give it a good old college try. Came out of law school and worked for 4 years at a big Wall Street corporate firm. And what I found is, the guys on the business side seem to be having all the fun, right? They're the ones going in the back room, doing strategy, trying to negotiate, running the numbers. And these were all things that I knew were a better fit for my personality. And so being the guy that just had to go paper it, it just wasn't a fit. So it ended up being great training. I did IPOs, had a bunch of huge bulge bracket clients like Goldman Sachs and the usual suspects on the street. But my biggest client was a huge real estate private equity firm out of the Bay Area, actually. They don't like a lot of publicity, so I can't say their name. But the transactions I worked on for them were just super exciting. I mean, as you know, real estate development is fraught with problem solving. And if you can successfully and consistently solve those problems, you can do really well for yourself and your investors. And that's what I really was drawn to, is that, you'd have these deals and all of a sudden there'd be a roadblock that seemingly could torpedo the deal, and you get very sophisticated, very intelligent minds in the room, and you could almost always find a way to get around that, to bring parties together. So I really enjoyed that. So coming out of the law firm, I went over to the banking side as an investment banker, raising capital for both third-party real estate sponsors, because I knew that space well and had a lot of contacts in that space. And then at the time also, the China space was really hot. This was 2010. And so I spent a lot of time actually overseas, boots on the ground in China, meeting with CEOs of companies looking to raise funds in the U.S. And we ended up, again, having to come up with some creative ways to get some of those Chinese companies that were listed in the U.S. Delist in the U.S. and go back to Hong Kong and China, where where the investor base understood their business models a little better. That sector got really hit hard by some of the fraudulent accounting practices that some of the bad actors in the space had that just unfortunately affected the good, healthy companies as well. So finally, after spending 12 years in New York, it was time for a change. And I had a good friend that I met way back at Columbia who was in the real estate game, developing in Salt Lake City, Utah, where I have some family roots. And, thought it would be appealing to kind of come full circle in terms of real estate experience. So went in, was asked to join their private equity division, overseeing capital raising, structuring, and the multifamily development. So we were doing, Class A and some Class B plus townhomes with attached garages, both urban infill, downtown Salt Lake, and then kind of in the suburb areas as well. And just as I'd seen working for the large private equity developer client as a young lawyer, just fell in love with the fact that you come to work every day, there's a new problem to solve, and when you can solve those things, it can be very rewarding. Just in terms of getting a building built, you can pass by the building that you've built and see it, and you have an address to it, and that's you're contributing to the city landscape, which is always very gratifying. And of course, you're making good money for your investors and get to hear what they're doing with the money they're making. Some of have plans for their family and passing it on, in terms of generational wealth. Some are putting it into charities, and I just love the stories, behind the investors and what they're doing with their wealth they're creating from real estate. So that's how I got on the real estate side to come full circle to the development side, and then crowdfunding came on the radar.
I think it's pretty interesting. Sometimes a good career keeps you from doing something more exciting. Like I started off as an engineer, and I did largely the business side and manufacturing side of things, and it was a good career, and I was quite comfortable. Although I had a grandfather who had 14 businesses, and my father was self-employed, so the seeds were there. But sometimes if you're an attorney or doing a tech job, it's kind of then it's comfortable enough. It kind of keeps you in that I won't say rut, but keeps you in that on that track. And it's you really got to have some event in your life that kind of lets you jump off and try to grow your wings in something else that's more exciting, don't you?
Yeah, it's interesting you say that because, looking back, if I was to just do a psychoanalysis on myself, I remember growing up, I have an uncle who was in real estate development, and for whatever reason, I have many, many aunts and uncles. Both my parents come from large families, and I always gravitated towards this uncle, and just his personality was, a similar fit to mine, and I knew that, and I'd heard he had done several business ventures as well before. He made money, lost money, oil and gas, and futures trading, and with Merrill Lynch, and then ultimately with real estate, made money, lost money, with the swings. And I just always really gravitated toward him. My father, interestingly, was a corporate guy, which worked out very well for his personality. He actually was an ice cream taste tester. I mean, it's a little more involved than that. He was a research and development scientist who had to come up with 5 different flavors every time marketing asked for new chocolate. But yeah, he worked for Ben & Jerry's and Dove Bar and Haagen-Dazs, and that was just a good fit. And so I think for a lot of people, realizing early on what your personality is suited towards, what kind of risk and stress your personality is suited towards. I mean, I have a lot of friends who wouldn't shoulder, develop really in a real estate developer, that kind of risk and stress, wouldn't shoulder that well, but, can deal with, huge client deadline risk, as corporate lawyers and bankers. But yeah, I think ultimately you hopefully find what you're well suited for and are willing to take that leap of faith when given the opportunity, or sometimes you just have to create the opportunity, right? If you wait too long, it never comes to you.
Yeah, and that's a good point, that kind of what's stressful to someone is not stressful to someone else. Sometimes maybe two people can take on similar kinds of stress, but different kinds of it, right? But so I don't know, you probably have a lot of folks that look at what you're doing, and as I do, look at me and say, my gosh, how do you handle taking on that risk and stress? And my feeling is, I don't feel it is, because I have teams that analyze it, to a high level degree, that I don't feel that I'm taking on a lot of risk.
Yeah, we're the same way. I remember, the stress of going into the law firm, Sunday night when I knew I had to start, Monday morning. That stress killed me. I mean, I felt like I was going to the coal mine the next day. But like you're saying, the stress of signing personal guarantees on a deal that you've, underwritten very carefully, have a lot of contingency cushions and have your debt service covered, substantially. And yeah, when you feel like you know what you're doing and you've done it before and have that confidence, then the stress, really is just in, hey, let's go execute.
I can also relate to the tangible part. As a double E, I spent a lot of time analyzing where these invisible electrons go and creating circuits with it. But the part that I liked the most, and I decided at age 11 what I was going to do for my first career, and what I really liked was building the equipment that that use this technology. So I think I've always liked the tangible side of things, and real estate really fit with that too. I agree. It's really nice to be able to go by a building or proudly show someone that wants to see some of your products and say, we did that.
Yeah, there's a lot of gravitation, I think, in real estate that people don't realize. I think a lot of folks looking in on a real estate developer just think it's all about the money, but I think once they get an insider's view, they can see the problem-solving aspect of it. They can see, the bringing of parties together. If you're trying to get entitlements to the city and satisfy what the city's looking for and increasing their tax base and the neighborhood and all that, there's a lot more to it than just, kind of putting your money in and trying to get a good return. So I agree. It's a very gratifying career.
Yeah, and it's not. I really don't feel it's a rationalization. I feel really good about having taken several hundred distressed properties and that were blights to the neighborhood and to the tax rolls and to the neighbors, and converting that back into a space that's very nice for a owner or a renter to have, and I think that's a real a win-win indeed. We have with us today, calling in from San Diego, Alan Lewis, who's the Chief Investment Officer and co-founder of Diversyfund, a syndicator in Southern California. We'll be back in just a moment and talk about syndications.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Have with us today Alan Lewis, who's the co-founder of Diversyfund, a syndicator who does development as well as buying buildings. And we're talking about the philosophy of how your life decisions and crossroads channel you in different directions. And as you know, we talk a lot about nuts and bolts on the program, but we also once in a while, and like those that have made some major decisions that worked out well, like talk to them about how those crossroads happen. And Alan, during the break, you were talking about how everybody in the end kind of wants to be happy, but there are different ways that people do that.
Yeah, it's interesting. I think the default is a lot of people obviously assume that just making a lot of money is a short circuit to happiness, but I think all of us find out when you have a moderate success in life that's not always the case. But you do find that, I think a lot of folks just are trying to build wealth, to spend time, whether it's, traveling the world with your loved one and just enjoying that together and taking in the beauties of and the wonders of the world. Or a lot of us are worried about our kids, right? And passing some wealth down toward the next generation, hopefully not to spoil them, but just to make sure that, for those kids where you're not quite certain how things are going to turn out for them in the long run, that at least they have their basic needs met. But that's one thing I've always done is whenever I get to know an investor in one of my projects, when I have the luxury of sitting down with them, I love to hear about why they're building wealth and what they plan on doing with that wealth. And it's interesting. Everyone has a great story of how they made their money and what they plan to do with the money as they grow it. I actually had a couple, a husband and wife, they were retired and their kids were grown. And I was asking them these same questions. And it almost became a marriage counseling session because they realized they never talked about it and they had totally different ideas. She wanted to travel and spend it, not selfishly, but she just like, look, we've worked hard. We sacrificed all these years and saved to get here. I want to enjoy a little bit. And he wanted to put it all into charity and just maintain the same lifestyle and didn't really want to necessarily travel. Wasn't his thing. And so just right in front of my eyes, all of a sudden they got a little bit of a tiff and it was a good time.
Oh, that's funny. Yeah, we were talking also during the break about why was Rich Dad, Poor Dad so popular. And I think it's because, it talked about philosophy. It was a paradigm shifter as opposed to just talking about nuts and bolts. And, I've enjoyed talking to various aspects with Robert about that. He was just on the program here not long ago and had the honor of being with him on his 20th anniversary of the release of Rich Dad, Poor Dad. And that's this past April, and that's amazing. And that's all about philosophy. And his whole mission, even though he's been a very successful real estate investor, his whole mission right now is give financial education to the general public that our schools teach nothing about how to manage money. And so no wonder folks like yourself and myself, Alan, don't get into something like real estate investing till later in life because it's really you really have to learn something about managing money and managing risk that you don't get taught in school.
Yeah, it's certainly true. I mean, my parents, God bless them. I mean, they never sat me down and said, here's how you invest well. I mean, they were from the old guard where you just put all your money in the stock market and you lived with the downturns and the upturns, and that's just what you did. So yeah, it's you have to kind of self-educate yourself by getting introduced to these books. I got introduced to Kiyosaki's book at age 18, and it was he's just done such a huge public service, in terms of helping people see that there is a formula to generating wealth. And it's not really just by trading your time for dollars, which, so many professions require us to do.
Yeah, indeed. They've sold over 25 million of that book, largest selling financial book of all time, and they estimate probably at least 50 million have read it. It's translated in many languages and countries around the world. And, of course, like most success stories, he had a tough time getting it introduced till he got invited to be on the Oprah show, and that changed his life.
Yep. For both him and Dr. Phil, right?
Yeah. That's good. And then he started, even though he doesn't have a lot of traditional education in economics, he kind of figured it out, and he's been calling these real estate needs fairly well in the last about 3 cycles. We have Alan Lewis with us, the co-founder of Diversyfund, syndication corporation in Southern California. And when Alan comes back, we're going to talk a little bit about syndications and a little bit of nuts and bolts that all of our techie listeners like to hear. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
I have Alan Lewis with us today, the co-founder of Diversyfund, syndication corporation in Southern California. Alan, I started off in real estate investing like most do, and instead of selling my first house, I rented it out and built up a portfolio of houses. But you kind of jumped over that. You went straight into the big leagues, and I've since then, I realized from talking to some others that not too many who did the same thing. That, my gosh, it's the same philosophy, same approach to investing with something that has some zeros after it. So why not start there? Feels scary.
Yeah. I mean, development, depending, I guess, on what stage you jump in. I mean, if you're getting in really early and having to deal with entitlements, that's its own ball of wax, right? Working with the city and dealing with, trying to get something rezoned.
Yeah. That's a different skill set. Right?
Yeah, I try to stay away from entitlement risk. We usually try to find stuff that's already zoned for what we want to build. For example, we're doing multifamily. It's got to be zoned and ready to go, so we just have to draw plans. But yeah, I mean, it's really just, you just got another layer of factors to deal with. Construction costs. Right now, of course, construction costs are rising. So, if you didn't put in a little contingency on price escalation or price inflation rather, then your pro forma is already behind, right? As costs climb, and just dealing with what it takes to get built. I mean, we actually, I learned the hard way that you got to, pay for professionals. So we hired on board a licensed general contractor who's done a lot of multifamily and luxury single family. What we're developing, he worked for a competitor, and so we brought him over, and it's been a super helpful resource just because he can look at a deal and say, I've built 4 of those, and I could tell you this exactly under budget or over budget. As you look at initial pro formas. So
there's no substitute for having experts who have expertise in the specific area that you're dealing with, is there?
Yeah, and we've seen folks, try to cut corners, save 10% on their costs by cutting out some of those consultants and experts, or not hiring a licensed GC instead of trying to, self GC it and just pay for a project manager. And 9 times out of 10, that does not work well.
We much prefer sharing fees with others and bring in experts, co-syndicators, others that have expertise in either that particular asset class or, if it's special skills like entitlement or developing or in that special geographical area. I think it's just no substitute for having a lot of smart heads together with expertise in certain areas. And even if you don't have, if you got a lot of experience, but maybe not an expertise in a specific area, then by getting all your heads together, you got a lot of folks that can ask some really smart questions.
Yeah, I think we share the same philosophy, Tom. I mean, we're big on what we call world-class execution, and that means, if we're not the expert in it, we hire the expert and don't lay anything to chance. And that means sometimes you're writing a bigger check to subcontractors and consultants than you'd like, but we're always happy with the result, and I think inevitably it ends up saving you dollars to avoid pitfalls that you wouldn't have spot without their expertise being focused on the problems.
Yeah, it really takes a lot of skill set to put together a deal like this. There's amazing how many different areas of expertise are needed, and we become generalists to some degree, but it sure is helpful to have specialists in the various areas to make sure you got all the bases covered. We got Alan Lewis on with us today from Diversyfund, syndicator in Southern California, talking about syndications, building developing, and all the skill sets that are required to do that successfully. We'll be back in a little bit and talk a little bit about syndications in particular and the kinds of asset classes that they like.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Have with us Alan Lewis, who's co-founder of Diversyfund, before that an attorney and an investment banker. before he really found what was the right match for him, and that was real estate developing and real estate syndication. So Alan, what's syndication? Is that synonymous with crowdfunding, and why do you like it?
Interesting. Yeah, most folks don't realize that that's what crowdfunding is. Ultimately, is syndication. What you're essentially doing is taking a crowd of investors, scattered across the U.S. who come to our website and are able to invest, through a fully automated online process in the various projects we have. And it's really what's happened is it's democratized this access to an asset class that really, unless you knew a developer and had a developer buddy, in your network, you really didn't have the chance to put, part of your portfolio into real estate assets. And so, we look at it as a way for folks to buy shares in these, vetted multi-million-dollar real estate projects where they really otherwise just didn't have that opportunity. And so, creating a true alternative to stock market. I
like your term democratizing. It really allows folks who never even thought that this was an option for them to participate in products that normally only large investors or institutional investors can afford to be in.
Yeah, if you think about it, most Americans don't even realize that a real estate allocation in their portfolio is really the big missing piece. They don't know what they're missing out on. And so a big part of, what you're doing on the radio show and what we do with our outreach to potential clients is just education of the importance of having a significant part of your portfolio diversified into alternative assets, the biggest one being real estate. And people are finally getting that message, especially the younger generation, millennials. They've been hearing the message for a long time, and I think they're more willing to, make that shift. And on day one, as they start to invest, put some in stocks and bonds, as everyone has done in the past, but also putting a significant chunk into alternatives. Yeah,
it's surprising. I'd say our average age of investor has been going down as they get educated, and I think traditionally, the folks that are maybe a little older have accumulated some wealth. They've classically gone the buy a bunch of houses route, which I think can work, and certainly did for me for a while. But they don't. Most of the population, I think, doesn't even realize that they can invest in multifamily and commercial products as a passive investor, and do so with a syndicator like yourself or Wilson Investment Properties, who's done an outstanding job of vetting these products and has the skill sets to do that.
Yeah, you always hear the story about someone who's, goes to the seminar about how to build up your own treasure chest of real estate assets. And I think most of those folks, find that there's a lot more to it than just showing up and buying a property. And so that's, where I think people are smart to trust experts like yourself, like us, that know how to vet these projects and deal with all the risks and potential pitfalls and still get the investors return that they're very happy with to help build their portfolio.
Someone asked me not long ago what single thing that I attribute our company's success, and I thought for a second. I said by having outstanding partners and outstanding experts that help us make sure that they are successful.
Yeah, for sure. I was thinking earlier you mentioned, how developers help, take care of some blight. We actually have a project down here in La Jolla in our backyard, and it was a busted cul-de-sac. It was, 3 properties, going to be all, beautiful, gorgeous single-family homes up on a hill with an ocean view. And the developer in 2008 went upside down. A second developer tried a bite at the apple when they took it over in, I think, 2014. And they got stranded as well. And so then ultimately we, using dollars from the crowd, and we always put in our own money, so we have some skin in the game as the developer, came finally, third tries a charm, and that house we had to hire, we really found the best-in-class design and GC for that, because it just had, there's already a frame and foundation, and just you could really get in trouble not hiring the expert on that one. So we went overboard and hired really the best we could find out of Beverly Hills and it's just been a phenomenal result. It's actually going to be done in about a month. So, when you hire right, you can get the job done.
Boy, doesn't that feel good? Win-wins are, I love it. Occasionally I've run across somebody in my life that says, the way I get ahead is I have win-lose and the other person loses. And, some people can get away with that, but I like the synergy of, as long as everybody gets their needs and the end result is something positive for everyone, I like that approach.
Yeah, for sure. You get to decide at the end of the day what kind of man you want to be. And being a win-win type of guy is what I teach my kids, and so it's incumbent on me to make sure I incorporate that in my business practices, and certainly makes it easier to sleep at night when you can have that kind of approach. I have to believe that you can do business that way. I look at guys like Warren Buffett, who's a big hero of mine, who just does business on a handshake, and integrity and reputation still mean everything to him, and we treat our deals the same way.
Yeah, it really is. I think integrity, and if you put your reputation and comfort at sleeping at night, and having teaching your children good principles, and leaving something for them, if you put all those things first and add the skill sets of expertise, you can accomplish a lot.
Yeah, no, I totally agree. I've had a couple of situations where I've had to do a deal on a handshake, and one was we had a deal we took over for some investors that came to us and said, hey, the previous sponsor couldn't get this done. Can you guys take it over? And we had a real short window to get a new loan in place to refi out the old one that was in default. And I had to chase down a couple of project managers at 11 p.m. at the 11th hour to go get them to waive construction.
But you got the job done. That's great. We got Alan.
The job done, exactly.
Good. We got Alan Lewis with us here. We're going to come back in just a moment. A little wrap up and summary with him, co-founder of Diversyfund here on Real Estate Radio Power Investing. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Alan, one thing we haven't talked about today is preference in asset classes. I've loved residential, done a lot in it, and right now I've been doing a lot more commercial than multifamily, just because it's more difficult to find good long-term cash flow unless you're doing development. What do you like about, are you doing strictly residential, and how much of what you're doing is development versus buying for long-term hold?
Sure. Right now we're doing all development. We're looking at some value add plays. The two asset classes that we really like right now, since we're focused in our backyard here in SoCal, where the markets are doing really well. Residential, of course, we're doing these luxury builds. Just have such a nice, healthy profit margin that we're able to get our investors usually an 18% per year return net, because we don't charge any platform fees like a lot of other crowdfunding sites do. Since we're the developer and make our money on that side, we don't have to charge platform fees. But then on the multifamily side, also ground up there, because we have developers profit baked in, we're paying 14%. Those are passive income products for folks that, just want to be able to collect a quarterly check. Between the residential builds with higher returns, more of a growth play, and the multifamily with, slightly lower return, but more stable of an asset class over time. We try to have a little bit of everything.
Are you looking at assisted living at all, or anything in the health medical field?
No, I was involved in that in my last private equity group, and just, the challenge there, of course, is there's an operations component, and but it's certainly a strong demand, and that demand for the asset class isn't going to go away anytime soon. So I'm very bullish on that.
But as we've been discussing, you got to have experts in every aspect of what you're doing. So we're about to launch a assisted living project, but we found somebody with decades of experience in both operations as well as development. I think that's the kind of thing you got to do. Alan, your website is what?
It's diversyfund.com, and that's DIVERSY fund.com. And folks can find us there and take a look at our projects. We're just trying to provide a few different products, just depending on people's risk and reward spectrum, and go check it out.
Alan, it's been great having you with us today. It's been fun not only talking about some nuts and bolts, but talking a little bit about philosophy that hopefully will help some others make some decisions that guide them in a path maybe at an earlier time, certainly than it did in my life, and maybe even in yours too. It's been nice having you with us. Thank you.
Tom, thank you.
So thanks for being with us here on Real Estate Radio Power Investing on KDOW AM 1220, the Wall Street Business Network. Remember to go to TomWilsonProperties.com, sign up for our weekly newsletter on real estate and the economics that relate to real estate investing. And also by signing up to that on that website, you get access to our 506B SEC kinds of syndications that are only allowed to be offered to those that are connected with us. So that's their commercial products that you can be invested in for like $50,000. So thanks again for being with us, and thanks for having Alan on. And remember, the only thing that matters is what you do next. See you next week.